good news for would-be home buyers who have put off purchasing a home because of rising prices. The real estate researcher CoreLogic says home prices rose just 0.2% in September from the month prior, a sign that those sharp price increases may be leveling off just now. That after making huge month-to-month gains over the past year.
A relatively obscure statistic about the housing market is giving economists some new insights about the housing recovery. It's called household formation, and it's been falling dramatically. And that may be casting a shadow over the entire real estate sector. Diana Olick joins us now to explain. Diana, welcome. And why don't we start, first of all, with exactly what household formation is?
Well, Sue, it's when someone who's living in a home with somebody else moves out of that home into another home by themselves. That is, you're taking multiple people and putting them in different homes. So you're creating a new household. It can be a rental apartment. It can be a home that they buy. It can be a home that someone else owns. It's just creating that second household where there was just one.
How much, Diana, has it been falling off, and what would normal be?
Well, normal historically is about 1.1 million new households formed every year. That might sound like a lot, but if you think about immigration, you think about young people getting out into the housing market, graduating from college, historically it's about 1.1 million. During the housing boom, we were seeing the numbers much higher. Now, in Q3, we got a report today saying just 380,000 households were formed in the third quarter of this year. That's down from 750,000 just the previous quarter. So that is a dramatic drop, and it's not the kind of thing that we want to see in a housing recovery. You want to see more household forms, that is more demand for new housing.
Well, what's keeping that demand down? What's keeping household formation in the basement, so to speak?
Well, it's, kids living in the basement, Sue, right? It's a lot of younger Americans, the millennials, we call them, who are not moving out of their parents' homes. It's people who are living with roommates because they can't afford their own place, be it a rental or being at a home purchase. It's just simply that some people are either cash strapped, they can't get the credit, whatever the case, they are just not able to move into a home of their own.
How much is this going to affect the housing recovery as we move into 2014 and beyond?
Well, it's certainly not a good sign. Again, you want to see that household formation growing. The builders certainly want to see it. We know that there is a lack of housing supply out there, but there's a lot of investor demand playing into that. We also know investors have bought up all these homes and they want to rent them out. Well, household formation has to take place for them to get more renters into the market, right? You need to see more households for there to be more demand to eat up the supply, and also for the builders to build more homes and therefore get more healthy. So we do want to see that number rise. The question is, was this just one weird quarter, or is this a trend that we're going to see going forward?
Well, I know you'll be watching it closely for us, Diana. Thank you so much.